Hi everybody, this is Gary Dean with Sentiment Timing. This is our weekly video recap for August 4th, 2015. So let's get started. At Sentiment Timing, we are in the belief that human beings and the markets are irrational, and there's always going to be an irrational element at work, and that is what creates the market opportunities. And Woody Dorsey's proprietary sentiment database and technical timing indicators is what we use to try to filter out these irrational markets. So let's get started with what has taken place. We had high sentiment numbers here. We got the quick drop, then we got a 4% sentiment reading, and that caused a rally, and which pegged another 91%. Sentiment reading, so it means there's a lot of bulls, and from there it kind of stalled. Now what I'll do is go over in the technical charts what I see playing out, and the one piece that we can give you from our report is that the June 22nd was a significant high, and there's a potential trading target, or what Woody is calling the kill zone, and that is when the best breaks may occur. Potentially up trades would be used for the short side. So basically we're leaving the door open for some up and down or choppy tape over, till the next very, very important turn dates approach. And when that happens, we're looking for a big break to the downside. Now, there's also a black hole event that's pending, and this is all going to be worked out as we approach specific dates. But things are going to start to get very, very choppy, and probably a lot of people are going to get caught on the wrong side of the trade. So we have, the 91% had sentiment had stopped the rally. From now, we're digesting some of that. And then what we're really going to be doing is setting up for the next black hole event. Now, anybody that's gotten those free turn dates, don't assume that that is the black hole. You'll be making yourself a mistake and probably lose a lot of money. This is going to be, as we approach, the last one that we hit in September 2014 was actually predicted all the way in August. Now we're trying to zone in on the exact date, and that came on September 9th when he picked out that it was going to be between September 18th and the 22nd, and it actually hit on the 19th. So just because you may have a specific turn date, you don't know which way it's going to be going, and you have to really pay attention to what's happening. So let's go to our regular charts where I can give you a little bit more information than what we have right there. So the pattern that actually fits best for me that I'm watching is that the top that we made at the 91% bullish sentiment was our wave A, and now we're making a wave B. And if it's going to play out, we don't have any bullish divergences here. It would mean it leaves the door open that this wave B is not complete yet, and it's going to come down to the 2082 and possibly down to the 2074. If that is what plays out, then we're going to be looking for this wave C to go up higher, and that's pretty much what we've been telling our members, as we're expecting some type of uptrade until the next important dates are going to be approaching. So this makes sense. Now, the only kind of wrench in this whole thing is that we may have already finished this wave B here. And why I'm saying that is if you just look at, this is a 5-minute chart of the S&P, A, B, C. So this actually works. And it like I said, the main thing is that we don't have any bullish divergences. Even if I go back to this one here, we don't have any bullish divergences. So this is leading me to believe, but I'm not, set in stone with it, that this is not the wave B, and that we actually have another push lower. And again, it would really set up nicely to come someplace into this area before heading higher. Now, when you take a look at the bigger picture, things are still complicated as far as what is going on. Where is this your wave A, B, and now we're going to come back up and test these highs or make a new high for a wave C? Or is this your wave A, B, and now we're going to start a wave C down? So being we have a black hole event that is pending, and if you anybody that was with us since last year, the last one, it was a massive, massive move. And again, this was predicted all the way in August, and then again it was reiterated on the 9th that it was going to take place during the 18th and the 20th, and we saw what happened. It dropped 200 points and actually made a low within the exact low time and rallied 280 points. So we have this pending right now, and this is why things are going to get so interesting. And if you just look back, any trader, if you can make 480 points in a matter of 3 months, I mean that's years of sometimes it's years of actual gains. So it's coming. What we're going to do is really just kind of map things out and see where these turns are happening. Right now, I'm keeping an open mind that we could come up and test here, but it's not guaranteed. It also, like I said, this could be your A, this could be the B, and now we're going to make a wave C down. But the short term, I'd really like to see a push below these lows here, because what that will do is actually set up some bullish divergences, and you may even be able to take a quick swing trade or a quick buy for the move up, and it may not get up to these levels. But the thing is, if you get in somewhere between the 2082 and the 2074, and you get a move someplace up at the 2102 or a little bit higher, that's a pretty good trade. So a lot of things are pending right now. Things are going to start to get excited. Normally, people look at this summer as a boring time. It's not going to be boring, trust me. So with that, until next week, enjoy the rest of your week trading, and I'll talk to you next week.